name is Donna Fizel, and I'm your host of Afternoon Drive Home on IC Radio in the town of Geraldine, Alabama. Your source for news and entertainment. You can also find us on television, channel 182, on Charter Communications, as well as Abundant TV, found on Roku, Apple TV, and Amazon Fire. You know what? Tax time is going to be coming up pretty soon. And so we're going to start talking about some of the ways that you can prepare. Really 8 things you need to know about getting your taxes done. I'm showing you a picture right there. This is Rhonda, and she's with Rhonda's Elite Tax Service LLC. This is where I get my taxes done. I mean, I can't tell you what to do, but I'm just saying she has been handling my taxes since 2013, and since we moved back to Charlotte, North Carolina, and she is awesome. She really studies everything out well. She actually works for you. And so she always tries to find the absolute best ways that you can get your taxes done without sending red flags out to the IRS, if you know what I mean. So anyway, Rhonda's an awesome, awesome lady. So here is just some of the things that you need to know about getting your taxes done. End of the year tax tips. That's what we're into right now. So let's go ahead and get started. And I found this through schwab.com. schwab.com, and it pertains to your 2022 taxes. Now, you know, every single year the tax laws change. So you've got to have somebody who does your taxes for you or take care of your books for your business who knows what they're talking about, okay? Again, you don't want any red flags sent to, about your taxes getting done. Okay, so let's go ahead and get started right now with the year coming to a close. We all know how important that is. So right now, let's just go ahead and start talking about how to access your tax planning for 2022. And income tax brackets shifted a little bit. So let's talk about that. We all knew this was going to happen. Anytime you get a new president in, things just start changing and start happening. And there are still 7 tax rates. A lot of folks don't know that. They think there's just one tax rate for everybody or something for the poor and the middle and the rich. No, it's not that. There's actually more. And so, but the income ranges, there's tax brackets for each rate have shifted slightly to account for inflation. We all know where that's happening, where that's been headed. So for 2022, the following rates and income ranges apply. So this is the tax rate for single filers, and then I'll also tell you about the married couples filing jointly. So 10% tax bracket, and this is from people who earn from 0 to 10,275. This is individual, 10%. And then also married couples filing jointly if the income goes from 0 to $20,550. Again, that's 10%. Now we're going to go up to 37%. So if you're somewhere between, let's say you're a family, and it's between 20,551 to 83,550, you're looking at 12%. Most folks are going to fit into that bracket. Now, 22% is going to be for a family of $83,551 in income to $178,150. So you're going to be taxed at 22%. Okay, 24% would be $178,151 to $340,100. Again, you're seeing the difference in the income, and the more you make, the more that you're going to be paying in. I love the idea of fair tax. I really, really wish that would happen. Okay, if you're one of those who is lucky to make over $647,851, you're going to be taxed at 37%. Okay, now number 2, the standard deduction increased slightly. Okay, and again, you want a good tax person, okay, somebody who's really into this. You got to be careful not to send out red flags when it comes to getting your taxes done. And we're going to be talking about that shortly. But the standard deduction increased slightly. Now, after an inflation adjustment, the 2022 standard deduction increases to $12,950 for single filers, and married couples filing separately, and to $19,400 for single heads of the household. For married couples filing jointly, the standard deduction rises to $25,900. Okay, let's talk about number 3 right here. Itemized deductions mainly remain mostly the same. For most filers, taking the higher standard deduction is more practical and saves the hassle of keeping track of receipts. I'd still keep my receipts. And you need to do this for a long time. It used to be 7 years, is what you always heard. But I will just tell you this. When we moved back from Charlotte, North Carolina, actually we had the IRS send us a letter from like over 20 years ago. And luckily, Phil kept everything. When we moved, I said, "Oh, don't take all that stuff. They only say for 7 years." Well, Phil kept it anyway. I'm glad he didn't listen to me that time because you know what? I would have been proving to them that we did everything on the up and up. So what happens? We had to send everything in, and they did. They actually sent us a bill for $10,000. They did. They did a guesstimate that we owed around $3,000, but interest and penalties went up to over $10,000. So save everything till you die, and probably beyond that, tell your kids to save it as well. Okay, so here are the following rules for itemized deductions. They haven't changed much, but they're still worth pointing out. So let's talk about this. Okay, your state and local taxes. Now, the deduction for state and local income taxes, property taxes, real estate taxes is capped at $10,000. Mortgage interest deduction. Now, the mortgage interest deduction is limited to $750,000 if you're in debt. But people who had $1 million of home mortgage debt since December the 16th, 2017 will still be able to deduct the interest on that loan. Okay, your medical expenses. Only medical expenses that exceed 7.5% of adjusted gross income can be deducted in 2022. Again, you got somebody really good like Rhonda. She already knows about all this, okay? Charitable deductions. The deductions for charitable donations are not as generous as they were in 2021. In 2022, the annual income tax deduction limits for gifts to public charities are 30% for AGI for contributions of non-cash assets. If held more than a year, 60% of AGI for contributions of cash. Keep up with everything that you've deducted. If you've given, and let me just say this, okay, I say commercials a lot of times, and they're big national accounts, and you know they're showing pitiful pictures of kids, animals, whatever, older folks, whatever. You need to check out and see what the CEO actually makes as an income for this charitable deduction. I believe anybody who's a CEO needs to make a good salary. That's not what I'm saying. But if they're upwards of $1 million a year for their salary, I'm not giving to that. I'm giving local. There was one, it was like an animal, showing some really pitiful dogs and cats. You know how I am? I love animals. It's going to stir me when I see the animal being mistreated, just like kids and anybody else. I almost gave money to it, and I thought, no, let me look, see what the CEO makes. Over a mil. Okay, over $1 million. That would take care of a lot of animals right there. Check with the person you're contributing to and just see how much of that dollar actually goes to the charity. If you're happy with it, go on ahead and donate. If you're not happy, find a local organization like Second Chance Animal Shelter right here. You know, I'm telling you, Doug doesn't make $1 million a year. So if you want to give to a charitable donation to help animals, go to Second Chance, okay? That works. Okay, now IRA contribution limits remain the same, and 401k limits are slightly higher. Let's go ahead and talk about this a little bit. This is number 4. The traditional IRA and Roth contribution limits in 2022 remain the same as the prior year. Now, individuals can contribute up to $6,000 to an IRA, and those age 50 and older also qualify to make an additional $1,000 catch-up contribution. Okay, if you're able to max out your IRA, consider doing so. You may qualify to deduct some or all of your contribution. You need to get with the person who handles your books and your taxes before you, and make sure it's somebody you can trust, okay? Somebody is actually looking out for your welfare. However, the 2022 contribution limits for 401k accounts have increased to $20,500. So if you are age 50 or older, you qualify to make an additional $6,500 catch-up contribution this tax year as well. Okay, number 5, you can save a bit more in your health savings HSA. For 2022, the maximum you can contribute to HSA is $3,650 for an individual. Now that's up $50 from 2021, and $7,300 for a family, and that's up $100 from last year. People aged 55 and older can also contribute an extra $1,000 catch-up contribution. To be eligible for HSA, you must be enrolled in a high deductible health plan, which usually has lower premiums as well. Learn more about the benefits of the HSA by going to schwab.com. That's schwab.com. Okay, now let's go ahead. Before we go into a commercial break, I've got a couple more I'm going to do. The child tax credit is lower after a 1-year bump. Okay, now what this means is tax credits which reduce the tax you owe dollar for dollar are normally better than deductions, which reduce how much of your income is subject to tax. In 2021, the American Rescue Plan, the ARPA, temporarily enlarged the child tax credit, but in 2022, the credit returns to $2,000 per child age 16 or younger. This credit also is subject to a phase out starting out at $400,000 for joint filers and $200,000 for single filers. For other qualified dependents, you can claim a $500 credit. And don't put the dog and cat in there. I know they're part of the family, but that's not going to count. And if you try it, they're going to come back on you and they're going to find you out, okay? Then you're going to have interest and penalties. So make sure you understand that. Now, number 7, the alternative minimum tax, the AMT, that exemption is higher. So until the AMT exemption enacted by the Tax Cuts and Job Act expires in 2025, the AMT will continue to affect mostly households with incomes over $500,000. For 2022, the AMT exemptions are $75,900 for single filers and $118,100 for married taxpayers filing jointly. Now, the phase-out thresholds are $1,075,800,000 for married taxpayers filing a joint return and $539,900 for all other taxpayers. Now, once your income for the AMT hits the phase-out threshold, your AMT exemption begins to phase out at 25 cents for every dollar over the threshold, okay? Get your tax person to explain this to you as well. Now, number 8, this is going to be the last one. When we come back from the break, I've got something else to talk to you, and that's what are red flags in getting your taxes done. Yeah, we'll talk about that when we come back. But the estate tax exemption is even higher. I love the idea of fair tax. You'll need to really, really do some research on that. And go to the people that you have elected and get them to look into it more, okay? Put a little pressure on them. The estate and gift tax exemption, which is indexed to inflation, rises to $12.06 million for 2022, but the now higher exemption is set to expire the year 2025, meaning it could be essentially cut in half at that time if Congress doesn't act. The annual gift exclusion, which allows you to give money to your loved ones each year without incurring any tax liability or using up any of your lifetime estate, and gift tax exemption increases to $16,000 per recipient, up $1,000 from 2021. So if you're thinking about giving your kids some money, you know, that they can go ahead and enjoy before you pass away, make sure your tax person is aware of this. Don't get caught off guard. Now, if you're 72 or older, make sure you've taken your required minimum distribution, the RMD, from your retirement accounts before the end of the year, or else you face a 50% penalty on any undistributed funds because it's your first RMD, which in case you can wait until April the 1st, 2023. If you haven't contributed to your retirement accounts lately, now's the time. So review the earnings for the year and take advantage of any deductions that can lower your tax bill. You've got just a few days left before the end of the year. Also, keep an eye on Washington for any last-minute tax changes that can affect your return before you file. Tax season will be here before you know it, and it's never too early to get a start in preparing. You know something? I like to prepare like as soon as January 1st hits right now, I'm going to be talking with my tax preparer. Yeah, I'm going to be talking with her. And Rhonda is an awesome, awesome lady, and she's not afraid to tell it like it is, okay? So find you someone who's like Rhonda. She's in Boaz, and we'll have the ad running here in just a minute so you can get a little bit more information about her. But Rhonda's Elite Tax Service, you need to check her out. Okay, let's go into a commercial break. We're going to be right back shortly.
Let Rhonda at Rhonda's Elite Tax LLC take the burden off you for all your tax needs. I know because Rhonda has been taking care of my business since 2013. I feel Rhonda works for me because she knows the direct questions to ask to better benefit my unique business in order for me to get back the biggest refund possible. Rhonda is an ongoing student, and she knows tax laws are in a constant change every year. Call 256-281-9903 for an appointment to take the dread out of getting your taxes done. Rhonda is located at 11968 U.S. Highway 431 in Boaz. Again, that number is 256-281-9903. And let Rhonda's Elite Tax LLC champion your personal and business taxes.
Twin City Used Car Sales has been serving drivers in the Northeast Alabama area for years with a quality selection of late model used cars, SUVs, and pickup trucks. On top of our extensive selection and competitive prices, we offer professional auto financing services for used car buyers of all credit levels. Whether you've just begun your search or you're ready to secure your next vehicle, at Twin City Used Car Sales, you will drive away with the vehicle of your dreams. The sales and finance staff at Twin City Used Car Sales look forward to serving you. And you can apply for financing online before your visit to our used dealership in Fort Payne and Gadsden, Alabama. Check us out on the web at twincityusedcars.com or go by the locations in Fort Payne and Gadsden. We sincerely look forward to serving you. The only place I buy my beef is Lone Tree Ranch in Collinsville, Alabama. Their cattle is born and raised on their ranch, grass and grain fed, and you can feel confident when you serve your family and friends because their beef is all natural and no antibiotics or hormones are added. You can buy whole beef or perhaps go in with family or friends and buy half. Their customer service is number one as they take care of the delivery to their local processor and can deliver to your home for a small added fee. They also offer herd replacement heifers. I always call Lone Tree Ranch in Collinsville, Alabama for my beef specialty recipes and cookouts, and you can too. Food shortages are increasing, so buy local by calling 256-523-6462. That's 256-523-6462. The Hatter Cafe and Country Inn is nestled in the northeast corner of Alabama the Beautiful in the delightful town of Mentone. We're located on top of scenic Lookout Mountain near Little River and DeSoto State Park and located only 5 minutes from shopping and restaurants. There is also a nearby community walking path and golf course. We welcome everyone through the doors and we are committed to outstanding service for all guests. At the Hatter Cafe and Country Inn, we invite people from all walks of life to come and get away from it all, enjoy the open spaces, treetop views, fresh, clean air, and experience Southern hospitality at its finest. We look forward to hosting you. To reserve a special event, or if you would love a special getaway at the Country Inn, you can call us at 256-634-2018. We're back. My name is Donna Fiesel, and I'm your host of Afternoon Drive Home on IC Radio. We're a source for news and entertainment. You can also find us on television, channel 182 on Charter Communications, as well as Abundant TV, which is found on Roku, Apple TV, and Amazon Fire. Thank you, Rob, for making all this stuff happen. We definitely appreciate that. Absolutely. So we're all over the world, all over the country. We're all talking about getting the taxes done. We all dread getting that done. But there are some tips that you can have, okay? Rhonda at Rhonda's Elite Tax LLC has been handling my needs since 2013. I won't let anybody touch my stuff, my taxes but her. She's it. We were talking the first part of the show about 8 things to know to get your taxes done for the year 2022. Okay, now I'm going to talk to you about 23 IRS audit red flags. It's a bunch of them, isn't it? Right? You don't want any red flags happening. And that's the neat thing, too, about talking with Rhonda. I've had some, she'll say, you're completely legal in getting this done. However, you've got enough deductions, so we don't want any red flags going out there. So let's talk about those. What's a red flag? That's going to throw itself out there and manifest, and you just could get yourself into getting audited. So let's just make sure that you're doing what you're supposed to be doing, okay? All right. Failing to report all your taxable income, they're going to find you out. I just promise you they will. You know, a lot of folks say, well, I'm really careful what I do with my cell phone. Too late. If you've got an iPhone, they already know everything you're doing. I promise you that right now. The IRS gets copies of all the 1099s and the W-2s you receive, so make sure you report everything that's required income on your return. IRS computers are pretty good at cross-checking the forms with the income shown on your return. Now, a mismatch sends up a red flag and causes the IRS computers to spit out a bill that the IRS will mail to you. These letters don't count as audits for purposes of the IRS audit rate. If you receive a 1099 showing income that isn't yours or listing incorrect income, get the issuer to file a correct form with the IRS. This has happened before to me, okay? And again, the person I worked for gave me the wrong W-2. Okay, so that's what caused the issue. So we had to go back. It was like an act of Congress to get this redone. So they went on ahead and sent the right one out. But just be really careful. As quick as they send you that tax form, your employer sends that tax form, you better check it against your records and make sure everything is okay. The quicker you handle it, and if you'll handle it before you get your taxes done, less of a headache. That's all I can say. Report all income sources to your 1040 return, whether or not you receive a form such as a 1099. For example, you get paid for walking dogs, tutoring, driving, for Uber, or whatever you're doing, giving piano lessons, selling crafts through Etsy. The money you receive is taxable. It is. Yeah. Okay, making a lot of money. Okay, while the overall individual audit rates are extremely low, the odds increase significantly if your income goes up, especially if you have business income. Plus, the IRS has been lambasted for putting too much scrutiny on lower income individuals who take refundable tax credits and ignoring wealthy taxpayers. So, partly in response to this criticism, very wealthy individuals are once again on the IRS crosshairs. Maybe they're going to give the rest of us a little bit of a break. And if President Biden gets his way, more upper income individuals will be audited. He wants Congress to give, maybe they need to audit him. He wants Congress to give the IRS billions of dollars over 10 years for the agency to step up its enforcement efforts against wealthy individuals, large corporations, and pass-through entities such as partnerships and LLCs. The Treasury Department says that the president's proposal won't cause audit rates to rise for individuals with income below $400,000. I'm wondering about that. Depends, I think, on, I won't go there. To give the IRS $80 billion over 10 years for enforcement and other activities, but that bill is now stalled in the Senate amid infighting among Democrats. Okay, we're not saying you should try to make less money. Everyone wants to be a millionaire. You just need to understand that the more income shown on your return, the more likely it is the IRS will be knocking on that door. And they're really, really famous for doing that. Okay, taking higher than average deductions. This is where Rhonda comes in, okay? Even though I've had some of my deductions have been, all of them have been true, sometimes she'll say, you know what, you can actually get by without reporting this one because we don't want the IRS to be suspicious. And I'll say, but it's a true deduction. And she'll say, but it's not going to help you out. All it's going to do is put up a red flag, and we don't want that to happen. Okay, taking higher than average deductions, losses, or credits. If the deductions, losses, and credits on your return are large kind of compared to your income, IRS may want to take a second look at that return. Taking a big loss from the sale of rental property or other investments can also spike the IRS's curiosity. And ditto for bad debt deductions or worthless stock. But if you have the proper documentation for your deductions, loss or credit, don't be afraid to claim it. Go on ahead and do it. All you got to do is show the paperwork, okay? I keep everything, every little receipt, everything. We keep it all. So don't ever feel like you have to pay the IRS more taxes than you actually owe, because that makes them suspicious too. Everything's going to make them suspicious. But if it's yours, do it. Absolutely. And I'll tell you something, even gas receipts, like I've done this in the cold rain, okay? I get fuel for the car, and for some reason, it doesn't spit out a receipt. I know it's going to take me a few minutes. I go inside and I say, I didn't get my receipt. And then they give me a receipt because I'm taking that off my taxes. Absolutely, I am. Okay, taking large charitable deductions. We all know that charitable contributions are a great write-off and they help you feel warm and fuzzy inside. However, if your charitable deductions are large compared to your income, it does raise a red flag. Okay, now, donating a conservative or facade easement. Let's talk about this for a minute. We've got about 3 minutes left in this segment. If you've donated a conservative or facade easement to charity, or if you are an investor in a partnership, LLC, or trust that made such a deduction, chances are very good you'll hear from the IRS. Battling abusive syndicated conservative easement deals is a strategic enforcement priority of the tax agency. Revenue agents are targeting promoters, taxpayers, preparers, and advisors. So as a result of the IRS clamping down, there are about 100 syndicated easement cases on the tax court docket right now. Okay, running a business. This is another one. Schedule C is a treasure trove of tax deductions for self-employed people. But it's also a gold mine for the IRS agents who know from experience that self-employed people sometimes claim extensive deductions and don't report all the income. The IRS looks at both higher grossing sole proprietorships and smaller ones. The sole proprietors earning at least $100,000 of gross receipts on Schedule C and cash intensive businesses like taxis, car washes, bars, hair salons, restaurants, and the like have a higher audit risk. Ditto for business owners who report substantial losses on Schedule C, especially if those losses can offset a whole or in part other income reported on the return, such as wages. Okay, claiming rental losses. Let's talk about that for a minute. The passive loss rules usually prevent the deduction of rental real estate losses, but there are two important exceptions. First, if you actively participate in the renting of your property, you can deduct up to $25,000 of loss against your other income. This $25,000 allowance phases out adjusted gross income exceeds $100,000 and disappears entirely once your AGI reaches $150,000. A second exception applies to real estate professionals, gotta hurry, who spend more than 50% of their working hours and over 750 hours each participating in real estate as developers, brokers, landlords, or the like. They can write off those rental losses. So I'm here for you, okay? Anything I find that's going to help you out at tax time, I'm going to tell you about it. You need to go check out and let Rhonda at Rhonda's Elite Tax Service, she's located in Boaz, before you go down the mountain in Alabama, get her to handle your taxes. You'll not be sorry. And she's going to study it. And also, if she finds something after you've had it done and she finds something when she goes over it again, she'll call you and let you know about that too. You take care. Thank you so much for watching, and you are the apple of my eyeball. I'm always out there looking for you. You take care.